Hello, everybody, and welcome to the NextGen Planners podcast. My name is Dan, and I'm the head of community experience here at NextGen Planners. And today, I am very happy to be joined by a double act for the first time in a few months, and that is Mr. Gavin Brown from University of Liverpool and Matt Buck from Winterbar Associates. How are you doing today, fellas?
Hi, Dan. Yeah, nice to see you.
Morning, Dan. How are you? Nice to
Good.
see you again.
Yeah, you too. And just so you know, Matt, it is afternoon when we're recording this. So
Oh yeah, sorry. I'm used to morning meetings.
as
It's
opposed
all
to
right.
the people who are listening to this, it could be the morning for them as well. So we're just being evergreen, aren't we, with the content? That's
Yeah,
all.
yeah, yeah. Inclusive.
Exactly. So, for anyone who doesn't know, Gavin and Matt, they are both specialists in a topic which we have not covered on the podcast at all just yet. So, this is the first time we're actually even talking about this today, and that is cryptocurrency. And they have a very sensible approach to talking about it. And we've had these guys in the community talking about it before. A really refreshing approach on this very kind of volatile topic area at the moment. So to kick things off, I'm going to let either of you start. Can you both just tell us a little bit about what you do on a daily basis?
Okay.
Hi, Dan. I'll jump. Oh, no, I knew that was going to happen. Going after you. Sorry, Matt.
Okay. So basically, my background is I'm an IT consultant. Still do a bit of IT consultancy at sort of a board or strategic level for some companies. But my main sort of area of work is research and analysis of cryptocurrencies, new projects that are on the horizon, applications to real world fintech, and how sort of blockchain is evolving and is going to sort of mesh into technologies and stuff that we're is going to be part and parcel of our daily lives in the future. I'm I think Gavin would agree, blockchain, cryptocurrency subject matter expert. I've been researching cryptocurrency since about 2013, and I've been actively involved in projects and investments since 2015. And my main job at the moment is to oversee a fund launch which involves blockchain and crypto technology. So that's basically my day job at the moment. I'll pass you over to Gavin.
Good stuff.
Hi, Dan. Yeah, my name is Gavin Brown. I'm an associate professor at the University of Liverpool, where I specialize in financial technology. And within that field, really, the area of cryptocurrencies and payment technologies. In terms of my daily life, I spend obviously a decent proportion of my time either teaching on our postgraduate program for MSc FinTech students, or I spend my time doing research, various types of media commentary, and also appraising and evaluating projects and research in the cryptocurrency space. So similar to Matt, really, but more of an academic lens than a commercial one, but trying to be that credible voice inside the cryptocurrency world of what can sometimes be a difficult place to try and find the truth and understand the true risks involved.
Yeah, absolutely. I think that's why we wanted to get you on today as well. I mentioned at the start about being sensible, this kind of stuff. It is about talking the truth, and realizing where there are shortcomings, but also where people do get it wrong about cryptocurrency as well. So it's great to have you both on. I should mention as well, for anyone who's watching on YouTube, Gavin's in transit at the moment, so he's not able to have video on. So unfortunately, you've just got me and Matt to look at, which you could argue is not a bad thing, really. So Gavin, I guess I'll start with you. And Matt, I want to come back to you on the cryptocurrency fund part of what you just said there as well at some point if we get a chance today. But Gavin, I'm going to start with you.
Sure.
It's featured a lot in the news recently, cryptocurrency, as it always has for like the last pretty much 2 or 3 years. It's constantly just been either as a headline article or just somewhere in the news. So I guess a good place to start would just be to kind of, if you could just, as an expert in this area, could you just summarize the last year in cryptocurrency and also how you're feeling about it all at the moment as well?
Yeah, so that really is a great question, and I guess to summarize the last 12 months in a single word, it would be the word difficult. I think I would say the build up to COVID and COVID itself was actually a bit of a friend to cryptocurrency. Allowed us to come out of something called the cryptocurrency winter, which was a period of about 18 months of very stable, relatively stable prices. But COVID was a bit of a friend to crypto in the sense that people often had time to research and think about crypto. Many people, and evidence has shown this, receive support checks and monies around the world from different governments, and then often use some of those monies to actually invest and think about cryptocurrency for the first time. So what we started to see was a bit of a surge. Prices started to spike, and the price of Bitcoin, which is always the lead KPI, touched near 65,000 US dollars per coin. Yeah. Fast forward into the recent times, and over the last 12 months, prices have plunged somewhat and come down to about a third of that level. That's caused by a number of factors. Cost of living crisis means that very difficult to sustain having a cryptocurrency portfolio at the same time as struggling to meet your sort of mortgage repayments and other sort of mainstream things, because the world of crypto is dominated by retail investment. So prices fallen off significantly, spiking interest rates, difficulties with other asset classes, but coupled alongside that, we've also had a lot of the shakeout from the FTX collapse, and that's shaken really the trust across the ecosystem more broadly. So a really difficult time for prices, difficult time for projects, but certainly an asset class which is still very interesting and certainly not dead by any stretch of the imagination, in my opinion.
Yeah, I was looking at it you were talking there about our Bitcoin. I was actually just looking at it last night, and the growth, even now, the market cap for it, I think is it? Correct me if I'm wrong on this, fellas, but it's like 297 billion or something like that, around that figure.
Correct, yeah.
Probably around there somewhere. I mean, so that just proves it's still an absolutely ridiculously big part of the future of finance. Depending on, no matter what's happened in the last, few months or year or whatever it is. And I think that's why, when people ask, is it just a fad? Is it now going to go away? Is it going to just completely just kind of dissolve? I think that's when the conversation starts to become a bit unrealistic, especially considering now the traction is already behind it. And I'll come to you, Matt, because cryptocurrency is something which, as probably understandably, given volatility with it, kind of the newness of it and things like that, it's something that a lot of financial planners, I would actually argue the majority of financial planners, are extremely wary about with their clients. But how seriously do you think that we should at least be taking it? Like, how seriously do you think we should actually be looking at this stuff, informing ourselves, educating ourselves, so that when clients do ask those questions, we know the answers to them?
Yeah, I don't think it's surprising that IFAs, financial planners, are wary of cryptocurrency. They've probably heard some horror stories from their own clients, retail customers, investors who have invested in Bitcoin or any other cryptocurrency at the wrong point and have lost a lot of money. So I'm not surprised about that. I just following on from what Gavin said, we've also had a particularly bad year for cryptocurrency up until this point, because we've sort of had a natural bear market coming out of that COVID scenario and the Bitcoin halvening event. And then we've had two sort of really big key things which have happened this year. One is the Terra Luna incident, which sparked a sort of a free fall in the price of Bitcoin, etc., in the market in general. And we've also had more recently the FTX debacle is what you describe it as. I think that they've now filed for bankruptcy, etc. That, for anybody who doesn't know, that was a centralized trading exchange that has gone down. A lot of people kept their money on the exchange, have lost money, and are now going through the insolvency process there. So there's a lot of things to shape the market at the moment. But and this is a big but, I've been through all this before. Over the past decade, I've seen this cycle. I've witnessed Mt. Gox, which was an exchange going bust 7-8 years ago now. Same thing happened, etc. It sparked a bear market. A lot of shaky retail investors after that because of it. I've also been through some problem on the Ethereum network with the DAO hack, which nearly brought down the entirety of Ethereum. And what I would say for anybody looking into this, investors or financial planners, is all of these, when you actually pull back the curtain and look behind them, are a failure in centralized controls, not in blockchain technology or the sort of infrastructure blockchain itself. The last decade has proven that blockchain is here to stay. I mean, I think what you just said before, Dan, the market cap of Bitcoin even today is nothing to ignore. It's certainly still here. There's still things going on, and that's still an impressive market cap for a cryptocurrency or a world currency, as you might describe it as now to have. So I think anybody who manages money for clients, or any sort of savvy investor, needs to have a view. They need to have a view on cryptocurrency and blockchain technology, positive or negative. And I would always advocate people to have a small exposure through, a regulated investment vehicle, or a very savvy and insured cryptocurrency exchange and stuff like that. So I think the profession as a whole has to take cryptocurrency seriously. Just the size of Bitcoin, even in this market, like we just said, is as big as several nation state currencies.
Yeah.
The technology is still advancing and is still there, and there's still a lot going on in the space and a lot to be excited about as well.
Yeah, of course. I think as well, like before I come to you next, Gavin, I just kind of want to touch on that point that we mentioned before about funds, and I think that's something that is definitely missing, and I think that will help potentially to drive up the level of trust, because my view is arguably that, diversification is an absolute default if for a good financial portfolio, and that's what a lot of people, a lot of good financial planners will start with diversification. And the problem with crypto is that there's no, at the moment, I think there's only one fund in the world, isn't there, that's actually what we would call a mutual fund for cryptocurrencies, and that's in the US, and it's not accessible to most people because it's not regulated. So I think that potentially solving that fund gap could be a solution to this as well. What do you think on that?
I think, sorry, Matt, after you.
I was just going to say, so we're currently in soft launch mode for an FCA regulated cryptocurrency fund here in the UK. So that will be for what we see as a fully diversified portfolio within the blockchain cryptocurrency space, FCA regulated, backed up by an insured FCA, custodian, etc. So those are the type of investment vehicles that retail customers will want to sort of target when they become available, ones like ours, etc. Gavin, have you got anything else? What were you going to say on that? Sorry.
No. I was just going to expand a little bit more on the, from a fund perspective. One of the biggest challenges, especially in the early days, is anything around having a segregated and regulatory approved financial custodian. Which sounds easier than you might think. Custodial services are often vanilla in the fund world, and although it's important as part of due diligence in terms of any investment opportunity or vehicle, the custodian was always a bit of a given and quite an easy thing to audit and put in place. Whereas in the world of digital assets or cryptocurrencies, it's very, very difficult indeed. Up until very recently, there were no FCA regulated cryptocurrency custodians. Now there are a handful. I know Matt works with some very closely. And for those handful, many of them will only custody a very limited list of digital assets. So the space in terms of regulation is moving at a slower pace as compared to the technology. Now, some people would argue that's quite right. That's exactly what regulation should do. It shouldn't move as fast as the tech, because you can't learn at the point of the horizon. You've got to step a little bit back from the technology and follow it in lead step, almost learning as you go. And that's really where many of the regulators are today.
Yeah. I guess that's exactly true. You just opened my thinking there. And also, I think that's probably one of the areas of frustration with it as well, is that the regulation perhaps isn't moving as fast as the technology, because the technology is moving, I think you guys would agree, it's moving ridiculously fast as we learn more things. And I think that's probably one of the frustrations with it, is that people can't have regulated access to this kind of stuff just yet. And that's probably why it has a bad name as well. Yeah. Gavin, I'm going to come to you again, just because we've kind of touched on it today, but we definitely touched on it in the past, because one of the things that is forgotten about this is the currency part of it. So we always say crypto as a kind of shorthand of it, but we forget that the second part of that is actually currency, and it was actually intended to be a currency rather than being an asset that people invested in. I think that it wasn't blocked from being an asset, but it's not necessarily what it was launched for in whenever it was 2008 or whatever it is. So do you think that, like, it being an actual currency, do you think it's a realistic possibility in the future that it will actually become large scale?
Yeah, I think we've got to be ever so careful, as you say, with the currency word. I do quite a lot of work with HMRC, the Treasury, and the Bank of England, and people like that, delivering talks about digital assets. And in all of their literature, they always refer to it either as crypto, digital assets, or crypto assets. They never use the term cryptocurrency. One of the reasons for that is the word currency is not just a loaded term psychologically, but it actually comes with various regulatory, legal, and tax implications. As soon as something is defined as a currency, then it opens up the floodgates to all different kinds of treatment, uses, and regulatory permissions. So often people will refrain from that and they'll use the word crypto asset. And to some extent, this is kind of the challenge that we've got, is that this new type of technology has been created and we're trying to use an outdated or old taxonomy in order to try and classify it and understand it. So, I remember only a few years ago in the US, cryptocurrency used to be treated as property, as real estate. So if you use some Bitcoin to buy a cup of coffee, you technically sold a very small portion of real estate and had to, the tax treatment on that was also treated in the same way as well. So to some extent, we're still wrestling with this idea of, is it a currency, is it not a currency? And the truth is, it's many different things all at the same time, and also new things as well, which is what makes it so, difficult to deal with. Now, when we think about those things that it can be, yes, it can be a currency. The largest ever Bitcoin transaction happened just under a year ago. It was over $1 billion. It only cost a few cents to transfer and remit those funds, and it happened in mere minutes. So much more stable, much cheaper, much more transparent than any remittance or global payment system when it works correctly. But at the same time, there are a whole host of other things. The underlying technology which supports this is something called blockchain, and it can host currency-like assets, but it can also host other things as well. It can host smart contracts. It can hold NFTs. You can write books of insurance business on it. And this is where people often get confused. Is it currency? Is it something else? The truth of it is that this is the infrastructure and the fundamentals of something much more than currency, but it also includes currency. And I know this is something that Matt works with quite a lot at Winterbar as well.
Yeah, maybe just a word from you on that one, Matt.
From my perspective, I don't really mind whether, I used to call them blockchain assets, cryptocurrency, crypto assets, etc. I know certain has a regulatory and legal meaning when you're discussing them at sort of the levels that Gav's talking about. But I think that cryptocurrency is sort of slightly misleading because as a term, because a lot of them aren't intended to be currencies. Some of them are tokens, some of them are assets, some of them just get, if you hold one of these tokens or whatever, it gives you access to a smart contract system that then does some computation for you, etc. So it's not something that would be traded on a foreign exchange level as such. I don't even think, just to sort of go a bit further on that, I don't even think Bitcoin is a good currency. It's not fast. It's also, despite what Gavin just said then, it's not cheap to send it. If you wanted to do micropayments, for example, or pay for your cup of coffee in the morning with Bitcoin, you'd probably be stood there for an hour waiting for the transaction to confirm between your wallet and the person behind the counter. And it would cost you a large proportion of that coffee to validate it and send that from one person to another. So as part of, as far as the currency is concerned, although it's a catch-all term, there is a lot of different types of assets and different categories of things that fall into cryptocurrency. It's not just the transfer of value or the quick and easy transfer of value, if that makes sense.
It does, and it kind of clarifies when, my question started with it was intended to be a currency, but just because it was intended to be a currency
Yeah,
doesn't mean that it is a
yeah.
currency now or anything like that.
Bitcoin isn't going to take over the US dollar, right? For anybody who's sort of listening to this and thinking it will, I don't believe it's going to. Will it work hand in hand as a digital asset, as a digital gold? Will it prop up some, other stuff that's going on in the blockchain space? Yeah, of course it will. But you're never going to pay for your coffee with Bitcoin. I think the USD is, another nation state currencies are safe with that, basically.
I think on that point as well, you raised there, Dan, that you said it was raised, designed as a currency originally, and that's true. But this is the cornerstone of what is a broader topic known as DeFi, or decentralized finance. So Bitcoin is a form of decentralized money, meaning that it's not under any single person's control, and it's instead controlled by a community. But in fact, now there's a whole host of projects across the financial space which deliver decentralized versions of existing financial services. So you can have a decentralized exchange, you can have a decentralized custodian, a decentralized lottery, a decentralized insurance or loss adjusters. Any form of finance has its equivalent decentralized version, which, although relatively new and still quite embryonic, actually challenges some of the fundamentals of the existing financial system. And really the challenge is not necessarily whether this is going to come forward and become the new financial service system, but it is the case of which projects are going to win. What's the best bet going to be? It's a bit like being studied in the late 1990s, early 2000s, knowing that social media will become a thing and trying to discern which one's Facebook and therefore the winner, as compared to MySpace, Bebo, and the Friends Reunited, which are ultimately going to fail. We're almost at that kind of juncture.
Yeah.
That's true. I've never heard DeFi be compared to Friends Reunited before. But that's good. I suppose I think it's true. It's a decentralized everything. It's not just decentralized finance. There's other things that, Web3, for instance, that's growing in popularity and stuff. There's lots of things that are on that decentralized route at the moment. So it's an interesting time to be alive. I think we could all agree on that point. Matt, I'll come to you now because obviously our audience are financial planners, and all around the financial planning profession. So they're going to be probably asked questions about this, if not today, at some point in the future. And they're going to have to talk to their clients about it. I think we would all agree in reality. But how do you think that they could talk about it in a sensible way? Because we talk about financial planning in a holistic sense. We talk about it as not just looking at where to put your money for it to grow. We talk about it in everything. So what kind of how do you introduce this into conversations with clients, do you think?
That's a very difficult question to ask, because I'm not an IFA, but I do know, obviously from my own experience of dealing with my own IFAs and various IFAs that I've come across and had relationships with, that all the clients have to be risk profiled, essentially, quite regularly, from what I recall. I'd only recommend cryptocurrency, blockchain technology type investments to savvy, sophisticated investors at present, basically who are fully aware of the risks. Cryptocurrency is a high risk, high reward investment, and I would only ever advocate for somebody to for somebody to sort of have a 1-2% of their net worth portfolio in cryptocurrency. This is for IFAs, if you sat in front of somebody who wants to remortgage their house and put the proceeds of that into Bitcoin, I mean, that kind of thing is obviously an extreme example, but lunacy. And I wouldn't be advocating for any of that. I think it's a difficult conversation to approach with clients unless they approach you first. Like, for example, I've been having a look into this Bitcoin decentralization stuff. I'm a bit savvy. How can I make sure that some of my investments have exposure to this market? That kind of thing would be something that as an investment advisor, I'd be sort of looking for, and then sort of directing them down the route of you know, an FCA regulated fund or something like that. But it's not something that I'd be introducing to all clients. The other thing is, obviously, sort of everyone will be aware of this. If you are a young person with disposable income, cryptocurrency is a great way to get you maybe on the next step of the ladder towards wealth and your financial dreams, if you invest smartly, wisely, and are prepared to take the risks. If you are a 60, 70-year-old woman who's saved hard all her life and has a good nest egg there for retirement, I certainly wouldn't be putting it into cryptocurrency. So, you know, that is, in a nutshell, how I would be approaching it with my clients. But certainly, without a plethora of regulated funds out there to point to, it's a difficult conversation.
Yeah. And that is I mean, that's exactly why I got you guys on today, because it would have been so easy for someone who's so, you know, invested and bought into the idea of cryptocurrency to just kind of be a bit crazy there. But you've been completely sensible about that and said, you know, here's the truth, here's the reality. This is where we're at the moment. Gavin, I'm assuming you probably don't want to touch that question, but have you got anything to add on to what Matt's just said?
Yeah, I think I probably have, really. I would almost say, you know, when you're trying to appraise the space, just have a look at what large institutions are doing. You know, so one of the most famous is probably JP Morgan. So, you know, you look at JP Morgan, they're a very big custodial house. They also are one of the largest, if not the largest, mover of capital in the world on a daily basis on average. And yet they're fully exploring this type of technology. So much so, in fact, that they've got their own currency or coin. It's called JPM coin. It's only available to institutions. And it technically disrupts their own core product. It is a way of moving money using underlying blockchain technology. It's a version of the Ethereum blockchain called Quorum, and he's very successful and has over 300 banks doing institution to institution money transfers. So if people as intelligent and forward-looking and astute as people like JP Morgan are doing this, and they're doing it in such a way that it actually, to some extent, outcompetes their own core product, they're doing that for a reason. And that reason is that, you know, if you're going to be disrupted, then make sure you're the one who does and leads that disruption, so that your new financial version of your company exists throughout the next 10 years and the next generation. And that, in my view, is because many companies do see this new version of money and financial services coming along. And if it does come along, then that means things like cryptocurrencies, some of them at least, will do very well, either ones that presently exist today or ones that go on to exist. So if you've not got an exposure at all to digital assets, then for many investors, not all, as Matt says, but for many investors, that's probably a mistake, because you do want to have some kind of, it's almost an insurance policy. For any of your planners who read people like Nassim Taleb, who wrote Black Swan, he talks about this idea of anti-fragility, a barbell type investment strategy where you put a very small proportion of your AUM or liquid portfolio into not necessarily long shot investments, but certainly the types of things that will do very well in the absence of returns in more traditional asset classes. Yeah,
very true. I think Matt was wanting to come in a few times there. I think
no, I was just agreeing. I was agreeing with everything Gavin said, basically.
That's good. It's good to hear. And we're moving around a bit, but I think one of the biggest things that is obviously around today in our world, and I'm going to come to you for this one, Gavin, first, and then I'll come to Matt, is, you know, thinking of tomorrow and thinking about tomorrow's world, and, you know, global warming, sustainability, green investing, all that kind of stuff. And in our profession, it's growing all the time. You know, more people are putting money into a sustainable investing funds than ever before. But cryptocurrency, well, crypto assets, digital assets, whatever we want to call them, they've got, I think you would probably agree, they've certainly got sustainability issues or doubts around them. So how do you think that will be solved? I mean, do you think it will be solved? How do you think it'll be solved? And maybe just some words on that sustainability issue as well.
Yeah, so it certainly is a problem for crypto. It's actual and perceived sustainability. Many crypto pro investors will often point to crypto and say, yes, it does have sustainability issues, but so does the traditional financial system. And in some ways, it's trying to become a parallel or alternative financial system. But nonetheless, if you measure most cryptocurrencies, they are quite poor when it comes to sustainability and carbon emissions. If anyone's interested in looking at this, the University of Cambridge has a live index which plots Bitcoin in particular, its energy usage, and compares it to the energy usage of other industries globally. So you can get a feel for how bad it actually is. But generally speaking, things like Bitcoin use about 0.25% of global electricity consumption. So a small proportion, but still, it's still a big number, and more than the aggregate consumption of electricity of many small nations, around about the size of Ireland or the Netherlands. It is being solved, though. There are many solutions that are coming forward on that. Probably the lead one at the moment would be things like Ethereum has just gone through a change in its protocol, moving to a proof of stake from proof of work concept, which hopefully once it's done will improve its efficiency and increase its sustainability by up to I think it's up to about a factor of 100, although I'm sure Matt can confirm on that. So it's still early days for crypto. Crypto is still very young. It does have a sustainability issue. It is beginning to solve it and is increasingly getting better on that front. And really what I would say is just keep in mind that although from an ESG perspective that might keep you out of crypto, there are lots of sustainability solutions which still permit you to invest. So lots of wrappers, green offset solutions, which can allow you to still go long on digital assets, but also at the same time mitigate any sustainability issues, which might help you to stay inside your mandate or preferences of any investor that you represent.
Yeah. Just to jump in there, from my view, sustainability and green is still a difficult mix with cryptocurrency, because obviously Bitcoin being the majority leader in market cap and size of the space is what to term it in ways people understand is a big dirty diesel engine. Okay, that's what it is. It's still using proof of work, cryptocurrency mining with computers that use a lot of amount of electricity, generate a lot of heat, etc. And it has a huge power consumption to maintain that network. Advocates of Bitcoin would say that the proof of work model works because it's unhackable. It's never been compromised. It settles thousands of transactions a day. It's a brilliant system that just works. But it's a little bit like your old boiler from the 1970s. You love it, it just works. But at the end of the day, it's got to go. It's got to be replaced with something because it's not environmentally friendly. So just to correct Gavin slightly, if you don't mind, Gav, the Ethereum transition to proof of stake has been completed. It was completed several months ago. In Ethereum, the second largest cryptocurrency by market cap, is now pretty much 100% green. I don't like using the word 100%, 99% green. That basically doesn't use any computational GPU power expended for a mining operation to validate the network. It uses proof of stake, which is basically a mathematical formula in order for node validators to stake the staking algorithm essentially for consensus of the network. So anyway, it's green. It doesn't use the GPUs and the computers and such. Now that is a very important thing because it only happened a couple of months ago and people are still a bit wary. It's not fallen over yet. It's not stopped working. It's a complete change in consensus model. So the engine's changed and everybody's sort of waiting for it to break or for there to be a problem caused. There hasn't been one. I think as a little bit of time goes on, we'll then see the ESG crowd being able to really warm to this and turn to it. And it will open up an entire new avenue of investment into this market because we actually have now the second biggest cryptocurrency in the market as 100% green and ESG friendly, and I think that will grow and grow and become a very, very good thing essentially. So that's my take on the sustainability of the whole space.
It's good. It's sensible.
Whether or not it will outtake Bitcoin, I can't predict, but it's certainly a big player.
I'm interested to see as well with those funds that you mentioned before about, let's think in 10 years' time where potentially these diversified crypto funds will be, how that will impact things like sustainability and all that kind of stuff as well. Could be interesting to watch. Stay with you, Matt. We've talked about the volatility of it. I don't think anyone is shocked who's listening to this about cryptocurrency being volatile. That's one of the things it's known for, of course. And of course, it's decentralized as well. And I think that really does kind of strike doubts about whether this will ever become regulated, certainly in the UK, maybe in the US, around the world as well. Like, it's an interesting question. It's a hard question again, but like, what do you think the future of this is in terms of a regulated nature?
Which side of the fence am I going to fall on as to whether the UK is going to regulate cryptocurrency? Well, I'm not one for sitting on the fence. I'm gonna say that I think they're going to regulate it, and I'll tell you why. Before Brexit, or just when Brexit was happening, we were having conversations with sort of an ETF environment provider over in Malta when we were thinking of launching a fund over there. And we were sort of saying to the guy who's well known on the asset management scene over there, we were asking him what he thought about the future of the UK post Brexit and what they could do, because essentially, they're not going to have access to these markets anymore, or there's there's going to be loads of changes there that are in flux and that are still to be decided about. And one of the things he said to me that stuck in my mind was, the UK will have to liberalise its financial services sector in order to survive, because it won't have access to all this stuff in Europe. We may not be able to passport in for stuff, and a post-Brexit UK economy will be on its knees. And this is exactly what's happened. So I think the Chancellor, or Rishi Sunak now, sorry, the Prime Minister, is having to look for innovative ways to make money and to get people into the UK and to really sort of out of the box ways to G up the financial services. So it's no surprise that I think last month at the end of October, a bill actually passed Parliament, the lower house anyway, House of Commons, if I recall. And it was to, I think it was a financial services and markets bill in order to regulate cryptocurrency, and that was passed, and it's now with the House of Lords. So I think, as long as the Lords approve it, it will go through. I think Rishi Sunak is pro cryptocurrency. In fact, I think he said so to some newspapers, etc. Also, if we're going to compete with the bloc, with Europe, we got the van der Leyen administration over the EU Commission that was brought in several years ago. And one of the main mandates was to have a digital Europe with a digital currency. And that was one of the main projects. And now we're seeing that sort of coming out and being played out with certain projects and certain proposed launches in a couple of years. And I think in order for the UK to have a slice of that pie, they're going to have to provide a regulated umbrella within the financial services for cryptocurrency. So I think that it will be regulated in the UK. I don't know whether that'll be soft touch or a hard touch regulation, but it's certainly gone through the House of Commons now, and it's with the House of Lords. And I hope it'll pass. And I'll just finish off by telling you why I hope it will pass, because I don't think regulation is a bad thing for cryptocurrency. It will actually make cryptocurrency pull up its socks. It'll make these projects mature, and it will also give access to the buying, the selling, the trading of cryptocurrency to financial institutions, which should be previously mandated out. Yeah. That's my opinion.
It's good. Certainly not sitting on the fence. Gavin, anything to add to that?
No, I think I'm probably in with one voice with Matt there. I think regulation is a good thing. I think a lot of people who might describe themselves as pure crypto enthusiasts or decentralized finance enthusiasts would often say there's no place for regulation, and the whole point of decentralization is to remove nation states and centralize control, which is obviously true. But the problem is that how does that square with reality and true sort of macroeconomic wide rollout? So I think most sort of moderate or sort of middle leaning, if you like, people who understand cryptocurrency would suggest that some level of regulation is appropriate. And should it happen, should mean good news for the space. And invariably for those people who invested early would likely also mean good returns, assuming that they've selected their digital assets carefully, correctly, or just been perhaps lucky.
Yeah. But I didn't actually know that it was with the House of Lords at the moment as well. So by the time this podcast is released, that decision will probably have been released as well. So, if in hindsight, anyone who's listening to this in the future, tell us what it's like. Gavin, we mentioned about the UK there, but of course, one of your main roles that you mentioned before is to travel the world talking about cryptocurrency. I think last time we spoke, you were in Canada, which kind of tells everyone what they need to know about where you get off to. But how in general, like when you're talking to people from other countries, how are they feeling about cryptocurrency, blockchain, crypto assets, digital assets, all those kind of things at the moment?
Yeah, I think most people that I speak to tend to be, in all honesty, quite enthusiastic. But that's because it's probably a slight echo chamber. Because if anyone's dedicated themselves to crypto or digital assets, whether they're writing policy, tax legislation, writing books, giving speeches, or they just control and control the strategy for their banks for those assets, generally speaking, they tend to be enthusiastic. They tend to be personal investors. And that's what's captured their imagination and why they're so positive. So most people I speak to are very pro digital assets and pro crypto. The status around the world is mixed, I would suggest. Many nation states have taken a sort of an ultra hard position against crypto. So China in particular, where originally they came out against mining of cryptocurrencies to make that illegal. And then ultimately the trading and use of cryptocurrencies was pushed away as they started to roll out their new central bank digital currency, a new version of the digital yuan or digital renminbi. Other nation states are perhaps somewhere in between, the likes of India, often flip-flopping between policy and tax legislation and what's permitted and what isn't in terms of crypto. And then you've got more other nation states that are much more pro. I'd say the UK is reasonably pro and certainly sensible. But then you've got the likes of the US and in particular Switzerland, where they are extremely pro. And to some extent, you can even do things like settle your federal taxes at the canton level using crypto up to 100,000.
It's interesting to see there, Gavin, that it doesn't take much to sort of figure out there's a pattern there between the democratic countries that are pro crypto and what I describe as the non-democratic countries that are sort of against it. Is that right?
Yeah, I think you've got a point there. I think maybe it's not as rosy as that though, because often the only way to truly control crypto really is to curtail people's access to the internet. And so if you live in a true democracy, often that isn't palatable. So you kind of got to live with it. It might not mean you're pro it, but you just got to live with it. Whereas if you're in a nation state where the state is quite used to and able to curtail your freedoms, your digital freedoms, then you are in a position to push back against crypto. So maybe it's not necessarily about them being pro or anti-crypto. It might be a case of, are you actually able to respond to crypto anyway? And if the answer is no, well, you better be on board because it's coming, right? There's nothing you can do about it.
Yeah, I think we're verging very well too closely, in my opinion, to the world of politics in a few of these answers at the moment. We don't normally cover politics on the podcast. So maybe it's time to move on to the next part, Matt, which is about I was actually looking at this yesterday because I was, before this podcast, I thought, well, what I'm going to do is I'm just going to do a little bit of, extra research, just have a look online, learn a bit more about it. And the first thing I actually brought up when I searched cryptocurrency into Google was Twitter. And it was some weird NFT account talking about, I don't know, it was ridiculous. And that's me who's got a reasonable level of knowledge about this asset and about finance. So if the average person goes online and they search about cryptocurrency, they're going to meet this wall. And I've put in the script here about them being called crypto bros. We all know about crypto bros, don't we? There's lots more nicknames for them who will just spread misinformation, lies. They'll just never see the other side of the story apart from cryptocurrency. So obviously you're an educated man in this space, and you can't have got that far by listening to the crypto bros. So where do people go when they get sensible, to get sensible, unbiased, reasonable information about cryptocurrency, apart from this podcast, obviously?
Yeah. I'm not sure I've ever listened to a crypto bro, to be honest.
Good. That's what we like to hear.
I am 100% in agreement with you. It is so difficult to find credible, unbiased opinion online, especially because in most countries, this is an unregulated space. So you have people with baseball caps and sort of, T-shirts on, giving investment advice to other people. I mean, is absolutely insane, isn't it, really, when you think about it? We're all used to, going down to, your local bank and looking at the products and services they offer, engaging with an IFA, etc., being risk profiled and stuff like that before you take the plunge and move your money around. So the idea that you'd just sort of Google this and take some advice from a YouTuber, it is, I mean, obviously, if anybody's planning to do that, please don't. I'd like to think that us at Winterbar, Gavin, etc., have a credible, balanced voice, balanced opinion. I think you're going to ask me, or you have asked me, where do I go for to get some balanced, decent information that isn't biased. I can't recommend anywhere, to be honest. A lot of my job is to sift through a lot of information and sort of separate the wheat from the chaff. And unfortunately, people have still got to do that in order to get the latest information on what is an emerging market in an unregulated space. There's also, I mean, it's not just the cryptocurrency and blockchain channels and social media and YouTube out there. I've seen a lot of this sort of shilling and stuff being done for Forex, stocks and shares. You only need to sort of, Google Facebook share price and you'll get somebody in a baseball cap telling you about that. So it's very, very difficult to get credible information online. So unfortunately, I wouldn't like to recommend somewhere, for people to go. But, if anybody does want any watching this, who's a member of NextGen and does want any information or whatever, just reach out to myself or Gavin. We'll assist, point you in the right direction, or at least, give you a signpost. I don't know if Gav, have you got any ideas about credible sources for cryptocurrency online?
Yeah, well, I guess from my perspective, academic journals tend to be my place to go, but clearly that's not necessarily everyone's cup of tea to sit down with a journal. But
peer-reviewed. Yeah,
well, exactly. They're peer-reviewed, but the problem with the journal cycle is that they lag behind where the technology is, because it takes time to do that. What I would say is, in terms of general media and coverage and information, is it tends to be one way or the other. Either it's too positive, in the crypto bro analogy you both used, or if you go in search of rigor, sometimes it can be too negative. If you go to, read something on Reuters or Bloomberg, or you go and have a look at the Financial Times, or, I do a lot of speaking for the ICAW because I'm a member of the Institute, or you listen to the CFA podcast. They're all great places to go, and you'll always get a prudent perspective. But in my view, many of those sources can sometimes be overly prudent. So yes, you can protect yourself from all of the hype and the frankly, over sensationalization of it. But in doing so, you might also miss out on some of the real potential of the tech as well. So it's a delicate balance. And to some extent, there is really a void in the middle of media and information to give us that credible voice, which I guess is exactly why we're talking to you now, Dan, right?
Yeah, exactly. But also, I mean, we are only 14 years in, nearly 15 years into this thing. So it's still very, very young. So there's going to be this kind of polarization of this for at least a little while longer. Because like you said, it is just, and like we've all said, it's just such a polarizing thing. There's no kind of, it's like Marmite. There's no in the middle at the moment. So I agree with you though. I think, one of the places that you can get the worst information about it is things like TikTok. I think that
Oh
is
yeah.
probably, we would agree, that is one of the worst places to go if you want to find out reasonable information about this, because it is just completely just full of BS. So
Yeah.
definitely avoid that. This next question we ask everyone, but it's an interesting perspective from you guys, because we usually ask this to people who are involved in financial planning. Now, you guys aren't necessarily involved in financial planning, but you are in the world of finance. So I'll come to you first, Gavin. What are you most excited to see in the world of finance in the next 10 years?
I think one thing I'm most excited to see, although slightly cautious, is whether we see the increase in corporate issued currencies. So that could mean Facebook re-energizing their previous project, which was called Libra, and then rebranded to Diem. In other words, the fusion of social media with the world of financial services. So having a currency that can operate inside a social media platform. And a lot of commentators who work in payments often predicts exactly this. The idea that big tech is naturally pivoting towards financial services. So with your mortgage from Google, your annuity from Microsoft, your currency and banking system from Facebook, which I know sounds quite scary even to me as a kind of middle-aged academic, but the generation coming through just doesn't have that same level of brand affinity or stickiness when it comes to traditional banking. And if they can do it quicker, cheaper, and easier, these so-called super apps which are coming will incorporate both finance and social experience in one holistic place. And that probably tees up Matt quite nicely, because he might just utter the words meta in what he's excited about. That's my guess.
they can their project, but I do think
Yeah.
that there'll be cryptocurrency involved in the metaverse 100%, because they'll in order to have a truly global metaverse, virtual reality universe, whatever you want to describe it as, it needs to be borderless, and there needs to be one currency operating on it, I'd say. So that can be achieved by blockchain cryptocurrency. I think one of the things, Gav, that you were just saying then was really interesting, because we're seeing these big tech companies now pivoting towards finance, aren't we? Which wasn't their bag 10 years ago, but they're being able to pivot towards finance and providing wallets for people and providing a way of payment and exchange and stuff. And they're being able to do this, not because they've applied for a banking license or etc., but they're being able to do it because of blockchain technology. Suddenly, these big tech firms are able to integrate with cryptocurrency payment systems just by adopting some blockchain tech. And, fast forward 10 years, yes, we might see a cryptocurrency payment system operating as a default currency on Twitter, for example. We already know Facebook have tried to do it. I just think that this is, an extremely interesting time to be involved in this. One of the things I'm interested in is to see the full implementation of in use cases for smart contracts. I think in the next 10 years, the average Joe will interact with and touch a smart contract on a daily, weekly basis in their lives, but without knowing so. The idea that escrow services, third-party payments, payments for your electricity meter, payments for your rental on your car, etc., could all be done by smart contract quicker, cheaper, and more efficiently than centralized companies can do it now is actually an incredibly exciting thing. But yeah, I think I agree with Gav. I think where we will see the watershed moment is where these big companies pivot towards or pivot in the direction of providing financial services, and they're doing that not through the banks or the central banking systems. They're doing it through blockchain. And sort of the last thing that sort of springs to mind with this was, I think I was at a conference in Malta or somewhere like that, and some guy from Amazon stepped up on stage. He was actually, he might have been from eToro. That's two completely different companies. But anyway, he was sort of quite senior there. And he said, don't be surprised if in the next 10 years you see Amazon offering mortgages. And sort of nobody batted an eyelid, but I can sort of see this happening now. I can actually see it happening, basically. And that's terrifying but quite exciting at the same time.
Yeah, it's like we're living in Black Mirror. That's literally
Yeah.
all I was thinking when both of you were talking there is I am in a Black Mirror episode here. This is absolutely good. And I've never felt so old as well.
Well,
That's
yeah,
ridiculous.
Charlie Brooke has been right on quite a few things, I'd say. But let's hope that the vision of the future isn't so dystopian. I think there'll be a lot of positives out of this.
Be good. Good stuff. Well, we always like to finish by asking our guests for a book that has helped them in their career so far. So I'll start with you, Matt, just because you're on screen. What would you recommend our audience consume?
Well, I don't tend to read books about work or finance because I spend 8 hours a day researching this stuff. So by the time I pick up a book and go into the garden or wherever, or upstairs, I'm sort of perhaps not the best person to ask. However, I did read a recent book called Out of the Ether, and it's basically a book on how Ethereum started. And it's an expose of what happened, one of the early sort of hacks on the system, and really sort of finishes off giving you a great impression of how Ethereum will be the backbone to Web 3.0. It leaves you with an appetite for investment and curiosity. So that's called Out of the Ether, and I would recommend that to anybody. But what sort of changed my life, just thinking about it, from something I did read a long time ago, was sort of after I finished university, and when I was a bit sort of still wet behind the ears, I discovered the concept of fractional reserve banking. And I did a lot of research into that myself on the internet. And that sort of changed my perspective on wealth and managing wealth, and sort of perhaps who I wanted to become, and what I sort of wanted to achieve. And in learning about fractional reserve banking, when I did start to generate wealth in my early 30s, and I sort of started to put money away and stuff like that, it really did give me a solid worldview on having a diversified portfolio, real assets, bricks and mortar, money in the bank, commodities, stocks, shares, and sort of reading about fractional reserve banking sort of generated a whole sort of decade of sort of opinion and curiosity into money and the way the world worked, and perhaps how to be a savvy investor, sort of as I sort of hit sort of later on in life and started actually making some money. So that's my 10 pence worth.
Good, very good. And Gavin, what about you?
I'd probably opt for something a bit less specialized, which is a book by a gentleman called Niall Ferguson called The Ascent of Money. So Niall is a financial historian, and it charts the very origins of money all the way through the centuries, right the way through to the modern day, coming off the gold standard, and then obviously now where we are in crypto. And it's a great read because it really, by the end of it, if you don't already know, it basically teaches you where money comes from, how it's controlled, who are the power brokers, how is it susceptible, when crises have occurred, both monetary and fiscal crises, how does that all work? But it's written in a very entertaining way, a very enjoyable way, and it likes to chart lots of examples of how people have made a lot of money, but also how people have lost a lot of money as well. And that for me would be a cornerstone of any reading. So it's called The Ascent of Money, and it's by Niall Ferguson.
Brilliant. 2 or 3 good choices there. So yeah, I don't think we've ever had them recommended on the podcast before. So nice to get some diversity on here as well. Really good stuff. So thank you guys. That's all we've got time for today, but we do like to give the last word to our guests to say a big thank you for coming on the show. So I'll start with you, Matt. Can you tell our audience where to find you, how to connect with you, and anything you want to plug as well?
Yeah, certainly you can email me, mb@winterbar.co.uk. The Winterbar Associates page is up on LinkedIn. Please feel free to connect with me, etc. I'm also somewhere knocking around the NextGen forum. So if you just put Matthew Buck in there at the top, you'll be able to find me and send me a direct message if you want to reach out. Got any questions? That's great.
Good stuff. And you, Gav?
So I'm at the University of Liverpool. So if you want to reach me there, my email address is gavin.brown2@liverpool.ac.uk. Or feel free to reach out to me on LinkedIn. As I said, I'm at Liverpool University. Always happy to connect. Always happy to talk crypto and payments.
Fantastic. Well, that was a really, really good episode and, fantastic start to covering cryptocurrency on the Next Gen Planners podcast. So a big thank you to you guys for coming on today. It's been a pleasure chatting with you.
Cheers, Dan. Thanks as ever.
Thanks, Dan. Thank you for having us.
Thanks, Matt.
No problem. So that was Matthew Buck and Gavin Brown from Winterbar Associates and University of Liverpool on the Next Gen Planners podcast. If you want to find out more about what we do at Next Gen, you can go to nextgenplanners.co.uk and you'll find out more information about the community that Matt is a member of and all the other amazing things that our members come up with on a daily basis. We are also on social media, so please do connect with us on LinkedIn, Twitter, Facebook, TikTok and Instagram. And I should also say as well, like I do every time, if you can just leave us a review and also follow and subscribe to the podcast, that does help us grow and get more amazing guests like Gavin and Matt on the show. But for now, that's all we've got time for. So a big thank you to Gavin and Matt for joining us on the show. Thank you to you guys for listening as always, and we'll see you in the next one. Bye-bye.